Welcome to RFI's Banking Uncovered, the podcast going behind the industry PR, the media spin, the product awards and the investor reports to look at what's really going on in the customer data and to ask global thought leaders about their thoughts and views on the future of banking and payments.
Welcome to RFI's Banking Uncovered, where this episode I'm delighted to talk to Mark Donohue, the CEO and founder of iSky in Australia. So welcome to Banking Uncovered, Mark.
Thanks, Charles. Great to be with you.
So let's just jump right into it. Obviously, globally at the moment, we're seeing some really big trend shifts in 2025. And I think it's fair to say 2025 is the first year that in every market globally, consumers predominantly want to bank on their mobile, not online, not through all the traditional channels, but on their mobile. It's about 75% globally, like 82%, I think, in Singapore and Taiwan, which are the leading markets. So obviously that kind of like screen real estate, if you like, is becoming hugely important for banks and making sure they're doing an amazing customer experience job in that space. So what does iSky do, and why is that also very important to you?
We operate as a customer effectively. So we access providers as a customer. We have an account with the FIs that we look at, and it's through that lens of the customer that we then benchmark the experience, the availability of functionality, and delve into the good, the bad, and the ugly. So it's through, again, that lens that we see the change that FIs are bringing in and the volume of new experiences that are going to one channel or the other. And in our experiences and our data set, we're seeing the same sort of things that you're mentioning there. More FIs are more focused on rolling out functionality inside of the mobile. That functionality is getting broader. It's getting more diverse. It's also getting more sort of easy to use for customers as well, right? There's been a simplification in many cases of navigations and journeys, reductions of the cognitive load, just to make it a little bit easier for customers to make use of those apps on a day-to-day basis as they continue to build out the functionality that's within them. I don't think that trend's going to change again anytime soon, Charles. I think we've sort of jumped a bit of a hurdle, so to speak, where web is becoming absolutely second fiddle to what we see in the app. I still say to our clients that the bigger the decision, the bigger the interface. And I think if customers are sitting down on a Sunday night trying to plan their life, they're probably sitting there with a larger interface. They've got the laptop on their knees or something like that and doing their sums. But certainly for the day-to-day interactions, the balances, the cards management, the transfers and payments, they're all pretty much mobile first these days.
I want to come back to simplification in a bit because obviously there was a huge amount of clutter a few years ago in some of these apps, and they were really difficult to get around. But one of the things that's always been really interesting that we've tracked sort of since 2015 is, I always think of 2015 as the year that the neobank movement kind of really got itself off the ground from a PR point of view. Obviously slightly earlier in Australia and Asia than perhaps in the West, but that was the kind of year when they started appearing on banks' radars, and obviously they hung their peg or their coat very much on the peg of a great customer experience. And yet throughout the last 10 years, when we speak to consumers and we say, how good is the mobile banking you're getting, and comparing the fintech customer experience to the traditional bank customer experience, always slightly curious, because consumers seem to think that the banks are doing a good enough job. And is that something that you're seeing as well, or is that just consumers being a bit lazy or a bit undemanding in what they want?
Well, I suppose there's a degree to which people don't know what they don't know. I mean, many people won't have been exposed to some of those features that neobanks, fintechs, whatever you may wish to call them, are rolling out into their experiences. And so from that perspective, they're not really sure what they're missing out on. They wouldn't have any awareness as to what they're missing out on. Certainly when you look at the larger institutions and the sort of high street banks, the bricks and mortar banks that score well in our metrics are offering a great diversity of functionality. And I would say in that way, you see many of the leading apps around the world are in the traditional banking space, certainly from a self-service perspective. But there's also more that customers would need to do with a bricks and mortar bank, with a traditional bank, as opposed to what they would be doing with a neobank, at least in our experience, primarily because most of the neobanks don't offer the diversity of product that you would find in a traditional bank, and you're not then having to manage all that diversity of product as well. So it certainly differs from FI to FI, and it can be quite market sort of specific. There are some markets that are more evolved, more advanced than others. And you get the larger institutions all sort of competing with each other in those markets and offering relatively similar levels of functionality. And so in that way, I suspect it's because customers may bank with a couple of different institutions, and they'll be familiar with those institutions and the apps of those institutions. And then you would see those sort of comparisons. But yeah, most of the fintechs that we see are certainly doing very interesting work. They tend to offer more diverse innovations. They'll do things quite different and unique in that way. But these are not always things that people are necessarily needing on a day-to-day basis. Like there's one, Revolut, for example, a couple of years back brought in the ability for customers to be able to book their airplane, hotels and airplane tickets, I think it is, or maybe it's just hotels. But I think there's a real question as to whether or not customers are looking to their banking app to be booking their next holiday. And so there's some things in there that you sometimes go, well, is that the kind of thing that you really need in your experience? They've obviously developed a use case for it and an argument for it, and they've funded it. So they must be seeing a reason to it. But to the core of your question, yeah, I'd say that most traditional banks offer a level of functionality that keeps the customer engaged. Whether or not it's doing the right thing by the business is another question. I always try and encourage customers to think about, well, how can you reduce your costs through your digital channels? So how are we thinking about that cost reduction, or how are you trying to increase your revenues? And there's always more that can be done in those aspects. But yeah, I'd say that most banks get away with having the level of functionality that they have in their app because customers are not that picky when it comes to it. But that's not to say that that's a good thing. And again, from the business's perspective, they should be thinking about how they can manage that better as a cost channel for the business.
Yeah, I'll come back to cost in a minute because I want to pick your brains on that. But just what you mentioned about different markets. So we're seeing some pretty different behaviors in the data. So obviously in the US and in the UK, I mean, the UK is very much the story of Revolut, of Monzo, of Starling, but both in the US and the UK, if we look at the last 3 years, then we've seen huge growth from 3-4% to over 54% of the market, have used a neobank or a fintech. But in the last 3 years, I think it was 30% of new customers in the US open their main bank account, their primary bank account, which is the gold account to own, with a fintech, and that's about 25% in the UK. So they're starting to make really big inroads, not just in the top line numbers, but in the really important numbers. But we haven't seen that so much in Asia and Australia. Now, different landscapes, different markets. Is that something that's just going to evolve over the next few years, particularly across Asia, or is that something where there's just different levels of kind of usage and sophistication and ways of thinking about digital innovation in those markets?
I think trust is a big issue in those markets in particular. Like if you look at Hong Kong and Singapore in particular, they have been very focused on security of late. The more traditional FIs have either been pushed by the regulators or they're leading through industry themselves. And some of the measures that have been introduced in those markets are arguably amongst the best in the world when it comes to security related functionality inside of our apps. So if you look at Hong Kong, for example, you've seen all of those FIs in that market because of regulatory input, but leading into a space where they are now offering customers the ability to see all the activity that is occurring on their profile, right? So it's not just you last logged in on this date or this time. It's you downloaded a statement, you added a new payee, you changed your email address, so on and so on and so on, because the bank, of course, gets to see all that information, but most don't disclose it or surface it in the awareness of the customer. And of course, if you do that, you're potentially informing them around episodic issues that may arise if someone has in fact gotten access to their profile. Similarly, if you look at Singapore, they've all brought in lock features on accounts where customers can put their money into an account, but they can't take it out. I can talk more about that, but it's combined sort of impulse control, but of course also fraud. So trust and security are very important in some of those markets, but you are also seeing neos and fintechs coming into some of the Southeast Asian markets with a bit of an oomph. There's a few of them that are doing quite well. I think Jago in Indonesia, for example, is a highly underrated experience that many of our listeners would never have heard of. You could have a look at ZA Bank in Hong Kong, which offers an incredible rewards scheme. Mox likewise, which is a Standard Chartered backed experience, has been doing very well. So there's certainly a few in those markets that have done well, but you're right, the uptake in markets like America and like the UK seems to have been greater. I think there's a greater comfort level in those markets with some of these providers. Perhaps that's because there's a bit less trust for some of the more traditional providers, given some of the activities that have occurred in those markets. I'd also be interested to see where those demographics are sort of sitting in those markets as well, in terms of the age ranges that are embracing those neos. But anecdotally, the conversations I have with people have always sort of gone back to, oh, we can do more in that experience, or we like that experience, and we like the financial management tools or something else about that experience. So we'll park all of our money, our savings, our long-term savings, into a high street bank or a traditional bank, and then we'll just do our day-to-day spending on one of the neo providers, because that experience is better for us in terms of, just keeping a few $100 or a few $1,000 or whatever it may be in that account, and then using that. I think there's a lot of different opinions and approaches to how people are using neobanks, or how people perceive neobanks.
I want to talk briefly about the app features, because everyone at RFI, when they go out to present to clients and looks at the data for the last 10 years, we've been singing the money management, and money management is a feature that consumers want. And for 10 years, been presenting this to banks, and you can see banks sitting there going, really, is just a basic money management tool, is that really going to move the dial that much? And what we're now seeing, particularly with some of the big fintechs and new players, is that one of the keys to their really phenomenal growth is they've really nailed the money management feature on the app. So kind of two questions. Are you starting to see money management really as one of the big things that's being built out globally? And if you're a bank and you're looking at our data, that's just telling you, hey, you should be building a money management app, and then you're looking at your data, which says, and these are the best ones, and these are their this is how you should really do it from a best in class. What are your thoughts on that, and how that could work?
Well, I think the one thing that the neos do very well in that space is they simplify the experience. And I think fundamentally people are looking for simplicity in this. They want to get easy, understood, readily digested data points and insights that they can action. I think the average person is not looking for sort of big accounting software type experience, which you will still see in some banks. And in fact, I saw one recently that deployed it, and I just had me scratching my head wondering what the heck they were doing. Whereas if you look at the Revoluts, the Monzos, the Starlings in particular in the UK, and of course there are others around the world, simplicity, I think, is a core element of what they do in financial management. The left to spend meter, for example, was either Monzo or Revolut that first started that, and that was like 8 years ago. That kind of insight is a very easily understood and readily digested component of financial literacy or understanding for the lay person. When they're just looking at their money, they're going, oh, okay, I know I have this much left to spend in the month, for example. But my take on financial management is that we should be building, or banks should be building, toolkits for customers. And toolkits are the kinds of tools that customers can combine to enable them to set the risk parameters around the way in which they manage their money, I should say. So things like virtual cards, locks and blocks on cards, automations, virtual accounts, these to me are all parts of the toolkit, or tools that you can have in the toolkit. And by giving customers those toolkits, they will create their own environments. They will create their own dynamics around the way in which their money is managed. So, for example, I could have a virtual card that I want to give to my son or my daughter, whoever it may be. I want to make sure that they can only use that card once a day. They've only got a £5 limit on it because they've got to get on the tube or whatever it might be in London. And that's control, right? And that's management of the way in which your money is then being spent. And I think there's so much more that we could do in that space. And I think the simplicity of those tools is incredibly compelling and should make it easier for banks to roll them out, because you can do them sort of separate to each other, but as you build up that toolkit, you're getting closer to an endpoint. I mean, there really is no endpoint, but you're getting closer to an objective in which you have a toolkit that customers can readily delve into themselves.
Yeah, I mean, speaking as a parent with 4 teenage boys, that example sounds fantastic, controlling how they spend. Best ways.
I think Starling was marketing it in that way.
Yeah,
I think they were.
I do recollect that. So, just looking at the kind of key trends then that you're seeing, like, Is simplicity the number one trend in UX that you're seeing, or it's obviously the number one trend you recommend, but what's the kind of number one trend you're seeing across UX in the digital apps?
It's hard to pinpoint because there's so much going on across the globe, but I would say that we're moving a lot faster towards a customized and personalized environment for customers. We're seeing more customization. I differentiate between customization and personalization, as customization is customer-led tailoring and personalization is bank-led tailoring. Customization in the form of the ability for customers to create an interface, navigation, even to reduce their cognitive load. We're seeing providers now like HSBC, like DBS in Singapore, that are enabling customers to access what you might call light mode and pro mode, or something to that effect. In other words, pro mode is sort of all the depth of functionality, and then light mode would be a combination of features that are a lessened suite. And the DBS experience to me is fantastic because the customer can even choose at a level of granularity the type of functionality they want to have in that experience, right? I do need this, I don't want that, I do need this type thing. So I think there's a greater degree of customization happening right now, and then we're going to start to edge further into personalization. There's already very interesting work being done in that space, and we produced a pack on it not all that long ago. But I mean, all the conversations I've been having in the last 6 or 12 months have been around what's AI doing, what's AI going to be, what do we need to know about AI, how's it going to change things, all that sort of stuff. And for me, I'm encouraging FIs to get ahead of the curve by just thinking about the data that they can have on hand on the customer to be able to inform that experience once the technology is integrated into their user experiences. Because without the data, you really won't have a particularly compelling experience. It'll just be effectively just another bot type thing. So I would say customization and personalization, but then there's also a lot of other things going on, like security. So much dynamic work being done in security at the moment, as an example, but in the scope of customization and personalization as well.
That's a great segue to my next question, because before we go into AI and data and the cost to serve, I just wanted to talk briefly about security, because security is kind of if you have too much security, you create a friction-based experience rather than a frictionless experience. But if you have a completely frictionless experience, then you run the risk that the security won't stand up and fraud will occur. And whoever is at fault, quite often it's the consumer, it's the institution that's going to get it in the neck and be blamed for it. So kind of how do banks and FIs, how should they be thinking about that trade-off between enough security to protect the consumer, often from themselves, but still creating a frictionless experience and trying to get that balance right? And then kind of as the next question, how can they look to use AI to help solve that further?
Well, I think communication is core to good security. And if you have a look at, say, the larger institutions in the United States over the last 2-3 years or so, they've been working quite diligently in developing security hubs. And those security hubs, the ones that work well, are a combination of communication and self-service, and in self-service management of the customer's own security. If you have a look at Bank of America, for example, they emphasize that security is a shared responsibility. It's typed into the screen. It's pixels on the screen when you go into the security hub for Bank of America. And I think that's the right message to be conveying to customers. It is a shared responsibility. But if it is a shared responsibility, there is also an onus on the bank to make sure that they are informing the customer about what is going on their profile, so that they can act and respond to those issues or risk settings that they may otherwise not know or would not be comfortable with. And then, of course, the flip side of that is you've got to have the management tools in place for them to be able to respond to those episodic events as much as they respond to the way in which they may be setting up the boundaries and the parameters around their profile. So communication really is the cornerstone of most good user experiences. And I think communication is absolutely fundamental to security working well in a user experience. You've got to give them the tools. You've got to give them the locks and the blocks and the settings that will enable customers to manage their security. But if they don't know what's going on, they won't do anything about it. So communication is absolutely critical.
We've been talking about these apps, and we've been obviously within the frame of reference of consumers. But I just want to talk briefly about small business owners, because they're an often overlooked but huge segment. I think they represent sort of 92% of most economies. But the needs of a small business owner are very, very different. A lot of it seems to me in reality and in what we see in the data at RFI that a lot of things where you're looking at going, well, that's kind of nice to have for a consumer. That's a must-have for a business owner because they are time poor, they are under pressure, they don't want to spend their Friday night doing the books, dealing with stuff that they, if they can all do it through their banking app. So when we look at like apps for small business owners, where arguably fintechs had much more initial success because there was so much more pain to be solved there in sort of 2015 to 2020. What are some of is it similar things you're seeing, or are there any kind of nuances and differences in what banks should be building for small business owners?
I think there are some real fundamentals that many banks, in fact, miss. If you have a look at, there are a couple of markets, for example, that will not allow the small to medium business owner to access a banking platform that would give them access to additional user functionality. In other words, if you need to give access to your finance officer or your accountant or your bookkeeper or whoever it is that you have assisting you with the management of your money, you're not going to get access to that unless you upgrade to the sort of corporate tier that bank would offer. And that happens in a number of markets. So I think that things like additional user access are absolute necessities for the small business customer. We've seen now a number of instances where customers, having had access to additional user access in the small business package, have now found it moving into retail, because there is a pretty solid argument to make from a family banking perspective that kind of functionality will benefit the retail customer, but it's more commonly found in the business customer experience. So that, to me, is one of those things. I also think virtual cards are demonstrating really, really solid use cases for business customers as well. If you have a look at Air Wallets, which is now in, I'm not sure how many markets, but certainly dozens, and they have really focused on the use of virtual cards, and in combination with a suite of currencies for customers that are operating across borders, which of course many, many businesses do operate across borders, even if it's only to source their AWS account or whatever it may be. But that combination of virtual cards and locks and blocks on those virtual cards. And so it's enabling you then to say, well, using AWS as the example, I can create a virtual card that is specific to AWS. I can put that on my AWS account. I can cap or limit the spending on that card to one transaction a month of no more than $1,000 or whatever the amount is that I know my bill is going to be roughly. And in doing that, I have massively reduced the risk for the business, right? That scope of risk around that card is now so small and so narrow. And in tandem with that, from a business perspective, it's going to help anyone that is time poor to go, you know what, I don't need to pay that anymore. I don't even need to close my account with AWS or Spotify or whoever it is that I've got that card with. I can just go into the bank and click cancel and it's done.
Yeah.
So I would agree 100% that there are many things we can be doing for the business customer, which could even then trickle on to the retail customer, as we more often see it going the other way. But there's still much to be done.
Yeah, it's interesting that the flow is that way because, as you say, normally the flow goes the other way, particularly with all things digital. But moving on to not the elephant in the room, but the big issue in all banking and every industry globally at the moment, obviously AI, generative AI, the impact on what it can do for data, what it can do for customization and personalization, and in real time moments of exponential customer experiences, as well as like the impact on the cost to serve. So how should banks and financial institutions be thinking about that? Let's do it from a user point of view first of all, and then talk about the implications of cost. But what are some of the ways that they should be thinking about that you're seeing happening within the digital experience in apps?
Well, my narrative on this at the moment is the best way for banks to prepare themselves for this is to be data hungry and data ready, and to be looking for those spaces in which they can be gathering more insight on the customer that can then inform that discussion and that tool, inform the tool that will drive the discussion with the customer in the future. So there was a functionality launched by the Commonwealth Bank in Australia called the Benefits Finder tool. And the idea of the Benefits Finder tool is the bank leveraging its knowledge of the customer, which the customer is fueling, leveraging that knowledge of customer and linking it to a collection of publicly available information, which they've just taken off government websites and built into a tool that will bridge the customer's awareness between who they are, where they live, what the bank knows about them, to payments, subsidies, cost reductions, education support, whatever it may be, that government offers. All right, so customers by and large are not spending their time going around checking government websites for types of payments that they may be entitled to, or again, they may not even know that they're entitled to some. And so really all that's happened there is the bank is leveraging the data they have on the customer, and they're bringing all that data that they can get from the weird wide world into a space in which they build a knowledge bridge between the awareness of customer and that public data. That's, to me, pretty much the most compelling use cases that we will start to see early on in the AI era. Helping customers to better understand themselves, better understand the world around them, building knowledge for the customer in bringing those two otherwise disconnected or disjointed data sets together to just help them on a day-to-day basis with simple calls to action, easy flows for them to be able to act upon those insights when they arrive. But I mean, it's an exciting time. There's so much that will change in the banking landscape. I've been saying to our customers regularly, I fully expect that within 5 years from now, more than half the banks that we look at will have at least half their user experience in a conversational interface. Right? Yeah. So customers will go in and ask questions of the interface rather than just having static pages that they're navigating. There will still be a need for static pages, and we will have a period of transition, but we will get further and further into that conversational space, and it'll happen soon.
Yeah, I have similar conversations with Brett King, who points out that the customer is no longer actually going to be a human being. You'll just send your AI bot that knows everything about you and go and do some banking for me. These are the parameters. And so the customer interface is actually going to be the customer interface with the AI bot that's acting as an assistant to the human visit. It all starts to get very disconnected and open up a whole new world of how to create an amazing UX. But we're talking about all the amazing things you can do, which is fantastic. But the bottom line is cost. So how do you link improvements in the UX to revenue and to cost to serve?
Well, banks have got to get a little bit more, dare I say, entrepreneurial.
Yeah.
They need to look at ways to commercialize their data and to commercialize the exchanges that the customers are having through the channels that the bank is giving to them. There's an experience or a provider in the UK called Snoop, which I've long thought had a model that could absolutely scale and grow into that kind of experience that banks will need to look at in order to be able to remain competitive in an AI era, which is much like the benefits finder tool scenario I was just mentioning. It's linking customers with data around other service providers or even their existing service provider, but would highlight to them instances where they might get a better deal or a cost reduction. Or so, for example, if you're with phone company A, they'll go and look at phone company B, C, and D, and then come back and say, well, did you know that phone company B's got this discount and phone company C's got this discount, and so forth. Where banks stand to benefit from that is effectively being the middle person in that exchange, right? And they will be the platform. They will be the trusted, hopefully, knowledge source that is bringing the customer to a better outcome in terms of the management of their money, the use of their money. In fact, banks are going to have to start to do that sort of thing. They're going to have to start finding ways to offer service and insight to customers above and beyond the day-to-day sort of interactions of just managing your money or, making a payment or whatever it may be, because the competition around that data set, that insight of the customer, that knowledge of what they're doing with their money is absolutely going to increase. And if you get the likes of big tech companies starting to aggregate data from FIs and overcoming what has been the most significant inhibitor of those sorts of companies really driving that engagement with the customer in terms of their FI data, which is the ability for customers to continue to service their banking relationship through a third-party platform. In other words, you can't lock your card, you can't chat to the bot with the bank if you're on a third-party aggregator. So that competition will increase. And if you're not going to win in that space, you're only left with product. And if all you're doing is competing in product, you're competing in a race to the bottom. In other words, you're competing on the costs, the fees, the interest rates, and the like that really are all about dollars and cents or pounds and pence, and it's all margin stuff. So you've got to find a way to win on service. People will pay a premium for service if they like it, if they value it, if they want it.
Absolutely. So you're a bank. You're doing exactly what you said, but like every bank, particularly in this unusual kind of yo-yo global economic environment we find ourselves in at the moment, budgets are tight. So you can't do everything. You've got to kind of like do the thing that is most important. Perhaps as the first line of defense against big tech. But if you're a bank, where should you look to invest first? What should be the filter that you're using of going, okay, we haven't got unlimited budgets. We've got a certain amount to spend. We want to get as much return for that. So this is the area we're going to look at. What from what you're seeing in the apps is perhaps an answer to that question.
Well, again, I talked earlier about the way I try and frame any of these discussions with clients is to say, are we trying to increase your revenues? Or are we trying to reduce your cost? Right? Because if we're not doing one of those two things with what you're doing in digital, it begs the question, what are you doing? Like, what's the point of this? So cost reductions are the easiest ones to identify because you will typically have the data on it. And the way to get the data, if you haven't already started to delve into it, is to simply go to your call centers or go to your branch staff or go to the people inside the business that can give you the data that fuel the inbound inquiries that you're getting. And those inbound inquiries have a cost associated with them, right? Your frontline staff are talking to those people, they're trying to solve their problems, they're speaking on phones, you're populating phone centers to do exactly that, to deal with those queries. So finding those should be relatively straightforward. And they differ for every bank, and transaction disputes or fraud or whatever it may be. These are all things that can be dealt with through secure channels or can be enhanced through secure channels, through digital channels, if we're doing a good job. Right? If we're offering a user experience that is easy to understand, easy to engage with, is communicative, is making me aware when there's something that I need to respond to, that I know that I need to go and log in and deal with that. So the cost reduction ones are pretty straightforward. The revenue ones, they're harder. And
yeah, that's my question, because that's a much harder one to unpick. So how do you justify something, these are going to be the future improvements in revenue if we can do this? And what are some of the ways you're seeing that happening?
Well, it requires a little bit more of a leap of faith, doesn't it? Like you've got to build your argument. You've got to demonstrate the potential. You've got to try and be able to come up with a selling point on these things. I mean, if you're working inside of a bank and you're trying to come up with these things, you've got to work out, well, how much revenue can we create out of these things? And what are the sort of regulatory inhibitors or the legal inhibitors or the risk inhibitors that we may have around this? It's going to be different for everyone. But I do think it's important for banks to start to think about what are those areas in which they can differentiate themselves, which they can build something unique, which they can build, from which they can build something that is marketable and engaging. You've got to find something that differentiates you. Otherwise, you're just the same as everyone else. And in a world in which being the same as everyone else is not going to cut it, which it's not, right? The AI world is going to change that. Right? You can't just be the same as everyone else. You're going to have to find something. I was looking at Garanti Bank in Turkey not that long ago, and they talk to customers about their house and their car, right? And they seek to understand the car. Just as an example, they look at the car and they say, okay, well, how much is it costing you to run this car? And can we look to improve this scenario for you? Perhaps that means increasing your capital expenditure to reduce your operating expenditure over the course of time. Now, that's a perfect conversation for a bank to have, because the bank is perfectly positioned to be able to offer the capital to the customer to be able to solve that problem for them. But you've got to identify the problem, right? You've got to demonstrate to the customer, here's what's going on and here's how we can help you. Because if you don't demonstrate it, people, they won't buy it. They won't buy into it. So I think the onus is really on the bank to understand the customer, understand the world around the customer, and then figure out how they can align their products and their offering to that.
Yeah, I'm just thinking anyone listening to this should really look at Garanti Bank. I mean, they were were creating card loyalty 20 years ago that was way ahead of everyone else. There's an institution, they're incredibly innovative and forward thinking in what they do.
Yeah.
But okay, we're coming to the end of 2025. 2026, obviously there's the big easy predictions, but what's one prediction you've got for 2026 that you think might be slightly out of left field, or slightly surprise some people who are kind of like in the space?
So I'm not allowed to say AI. I got to say
No,
something
that's
else.
too easy. You can't, that's the get out of jail card.
I think what we are just starting to see, and what we will see more of, is banks breaking out of the confines of the app and into the operating system of the mobile device.
Okay.
Now, one of my big bugbears at the moment is that banks don't do enough in the operating system. The operating system is a fertile landscape for the bank to have a conversation and be more present in the day-to-day life of the customer. And we see some banks do this sort of thing, right? We know widgets. Widgets are typically focused on balances and transaction histories, and some of them will even include quick links into other functions and features. But there's so much more that we can do, right? Again, if we talk about security, why wouldn't we necessarily be exposing that information to the customer along the lines of the activity feed that I was mentioning in the context of Hong Kong? Why not have an activity feed for the bank sitting inside the operating system? It's there, it's present. It reinforces the sense, if not the reality, of trust and security around your money, and it gives the bank a more everyday presence in the life and interaction of the customer with their mobile device. You could have a look at Bank Al Rajhi in Saudi Arabia. They now use Spotlight search in iOS to enable customers to find their payees, their contacts, and initiate the payment journey from within the operating system. In other words, if I'm looking up your name in my phone, Charles, I'd click on Charles in my Spotlight search as the payee that has been extracted from my Al Rajhi banking experience. I click on your name and it takes me straight in to initiate a payment to you from the operating system. So I think there's a heck of a lot more we can be doing as an industry to get into the day-to-day awareness of the customer via the operating system. So there's my prediction for 2026. We'll see more in the operating system.
Fantastic. I'm going to hold you to that. Mark, I could carry on talking to you for ages. Unfortunately, we're out of time. Thanks very much for joining us on Banking Uncovered. Officially, welcome to RFI Global. It's fantastic to have you as part of the group. And I think with everything that's going on in banking in the mobile space and on the smartphone screen and that piece of real estate, I think the combination of our data looking at what consumers and business owners want, and your data showing what's working and resonating and best in class is a fantastic combination for all our clients. So looking forward to working with you, and thank you very much for joining us.
Thank you, Charles. It's an exciting time for the industry, and it's an exciting time for RFI. So we're looking forward to being part of it together, and great things ahead.
Fantastic. Speak soon. Cheers.